These are all, a lot of it is science, but a lot of it is art, I think, too, Gregory. And I just wonder whether in a period where the Fed is actually grappling with the risk of disinflation, or at least they're not necessarily going to exceed their targets. Yeah. I just wonder, it's never a good time for tariffs, but if you're trying to accomplish something, I wonder if you have more leeway in such a disinflationary environment right now to do it.
Potentially. I mean, there's been talk of these tariffs raising inflation, and indeed they will. And if you impose tariffs on consumer goods, the upward effect on inflation will be actually greater and faster. But you have to remember that these tariffs are negative for growth. And as growth starts to slow, as the economy starts to slow, you get a disinflationary effect. Right. And our calculations show that this disinflationary effect comes fairly rapidly. So from a Fed's perspective, which has that dual mandate of full employment and price stability, they're going to be focusing not so much on the transitory inflationary effect, but really on the disinflationary effect and the negative growth effect.
If you assume that consumers are going to pay everything, and I think that that's an art as well, not necessarily a science, because it gets spread out. I don't think it's 100%, obviously, to consumers. But $831, I can see that it's regressive. That's bad. It doesn't it doesn't tax the rich like you would. But we do tax the population to affect certain things we want to affect in policy or society or whatever. So I can see how you could argue that we will have some near-term costs to dealing with China's trade practices. Yeah. And at this point, I don't like that it's regressive. But we raise taxes for all kinds of things that I'm not sure are productive uses of capital, or at least not used efficiently by the government. So I'm not necessarily ready to just dismiss tariffs out of hand because of that if they're temporary and they actually result in something.
Well, if they result in some better trading systems
where
and
the
more
GDP
equal,
is higher years from now because
that's a possibility. The risk, though, I think, is that as we implement these tariffs, as so far we've implemented a lot of tariffs on intermediate goods, on capital goods, and those tend to be the goods that contribute to potential output growth, so to how much capacity we have in the U.S. economy. So if we're not only constraining consumer goods, but also these intermediate goods, we're actually weighing down on potential growth. And so I think that down the road, the effect is not a positive one, but actually a potentially negative one for how fast we can eventually grow. And yes, there might be some benefits for some industries, but the system that we have adopted or that we're moving towards, where we have these tariffs in place and then we introduce subsidies to certain sectors of the economy, are quite distortionary.
Isn't it true that if we had done what Joe is talking about, which is, in other words, essentially implement a revenue program and have that it was paying for another program, we would have had a study from the Joint Tax Committee, we would have had a study from the CBO, we would have looked at the economic implications and the costs of this, and that so far, there's no such study at all from the administration. Right. In what I have chronicled to be one of the largest tax increases since 1993, there is no estimate from the administration of the economic impact. What we have here are a smattering of estimates from the private sector trying to understand the economic costs, and I think that's a big, big problem with this. Maybe it is the perfect, most beautiful social program we have ever implemented. A series of tariffs to bring back domestic manufacturing. But if that is the case, where is the analysis to show it?
Yeah, I mean, that's really the key question. I mean, we're not seeing any analysis that proves the point that these tariffs are actually conducive to increased economic activity. We're seeing job losses across a number of sectors, and we've had tariffs now for over a year, which started with washing machines and solar panel cells and then moved to steel and aluminum. And the findings from the different industries are that we've actually lost more jobs
than we've created. Not only do we never know, these studies they may or may not be relevant, but even after we've done something, there's still arguments. I still don't know whether supply side is voodoo economics or whether it was a regular...
And when you brought your daughter to the college, you never knew if it was the exact perfect right college, but you spent time thinking about it. Now, was that time wasted? I don't think so.
Let me just ask you, was the Reagan supply side renaissance, was that real, or was it voodoo economics that resulted in a big deficit?
Yes.
We still don't know. So how are you going to know beforehand?
So let's not study it. Let's put a blindfold over our eyes and walk out into the wilderness unawares of what the future and the forward road may bring.
That's why we have the dismal science and economists.
Because we sit here and we think about it and may or may not be right, but at least there's an analysis.
Usually not.
As opposed to kind of like going off the cuff.